Welcome to this month's Market Update. I'm joined today by KC Lowe, Senior Consultant with Frontier. Hi KC.
Wayne.
It's good to be back in the same room together, albeit at a safe distance.
Good to see you in person.
So as we start our program for the year, the Reserve Bank have also started with their first meeting for 2021. Tell us a little bit about what came out of that.
So there's two parts to touch on there. The first part is about their policy. The second part is on their economic outlook. In terms of policy, they've kept the cash rate unchanged at 0.1%, so very low cash rate there. They've retained their yield curve control on the 3-year government bonds. What they have changed is that they've announced that they'll be purchasing an additional $100 billion worth of long-term government bonds once the current purchasing program expires in April.
So what would the RBA be trying to achieve with that?
So that sort of links into the second part in terms of the economic outlook. So in the Reserve Bank's view, Australia's economic recovery has been a lot better than expected, definitely a lot better than most other countries. If you look at the unemployment rate, that has been declining quite steadily. If you look at retail spending, that has been picking up. And if you look at repayments for deferred loans, so that's that a lot of that has recommenced as well. So it's quite a positive picture in terms of Australia's recovery. But in the Reserve Bank's view, they think that inflation and wage growth is likely to stay below 2% for several years. So really, this announcement of purchasing more government bonds is really just to try to push the economy along to recover a bit faster.
Okay. Well, staying in Australia and thinking now about the labour market and recovery there, what can you tell us about prospects in that space?
So as I mentioned, the labour market has been improving. When you look at the unemployment rate, it peaked at about 7.5% mid last year, and then in December it has declined to about 6.6%. So it has been declining. Our view is that the unemployment rate is probably not the best measure to track how the labour market is going, just because of what's happened in the economy. So we feel that a better measure is probably looking at the total number of hours worked, just because there'll be quite a number of people who are employed still, but not actually working because of government policy. So for example, a JobKeeper. So when you look at total number of hours worked, that has recovered quite strongly, and it's almost at pre-pandemic levels now. Not quite there, but it's recovered a long way. So that suggests to us the labour market is recovering quite strongly, but there are some risks there. So one of the risks is just long-term economic scarring. So to look at that, we've looked at long-term unemployment rate. So how that's defined is people that's been looking for work for 12 months or more. So when you look at that, that's well above pre-pandemic levels. The other part we look at is full-time and part-time jobs. So if you look at what happened when we had the lockdowns last year, we lost both full-time and part-time jobs. But since then, a lot of the jobs that's been added back has been part-time jobs. It's only really in the last few months that we've noticed full-time jobs also starting to come through again. So if we can see that trend continue in terms of full-time jobs being added, that'll be very positive. So overall, we think the labour market is recovering pretty well. There are some risks there, but when you look at job ads, that continues to grow strongly. So overall, it's a pretty good picture.
Good. Just so much happening in markets and economies around the world as we work through this recovery phase. That'll keep you busy. There's a lot to think about, but also some positive signs and some opportunities for investors as well. Thanks, KC, and thanks for watching this market update.